Coming up, US inflation eases, China's economy slow, and we take a look at the outlook for tech and commodity demand. All of that and more next. Hi everyone, welcome to the SBS on the Money podcast for this Wednesday, the 16th of July 2026. It's a day where the Australian share market rose, the S&P ASX 200 up 0.4% as BHP rose and Macquarie Group lifted to a record. Oil prices continue to climb too today. Investors were also pleased by a softening in consumer prices in the US, which I asked James Gerrish from Market Partners about. So, James, inflation in the US has eased dramatically from 4.2% to 3.5% in June on falling energy prices. But as we've seen in the month of July, those energy prices, namely oil, have bounced back on renewed conflict in the Middle East. Still, the market seems to think that the chances of a rate rise in the US has fallen as a result. So are investors ahead of themselves?
Yeah, it was a good result last night for the inflation side, Ricardo. You made mention of the reasonable drop. It's actually the first time prices have gone backwards since the pandemic. So that's a positive trend. You made mention of the headline number at 3.5%. You look at the core CPI came in at 2.6%. Of course, the Fed's preferred measure is the core PCE. So we're yet to see that number more recently. But overall, inflation is tracking in the right direction in the US. Markets did price out some chance of further interest rate hikes over in the US last night. 2-year bonds were down 8 basis points. So that's a reasonable move, but we're still pricing, they're still pricing in about 40 basis points of tightening over there. So I think that had something to do with Kevin Warsh, the new Fed chair, sort of downplaying that inflation number, saying the Fed's got more work to do. So look, it's heading in the right direction. I don't think markets are getting too ahead of themselves. I think that there is a lower chance now that they'll raise rates later on in the year, which is ultimately a positive thing for the US.
Now, we are seeing solid earnings from the US banks overnight, which really boosted markets there, but some softness in technology, namely IBM, shares down 25% overnight because its clients are basically spending their tech budgets on hardware for the support of AI instead of software. And then you've got the likes of Elon Musk's SpaceX, whose share price really surged on debut, but now they're back to its IPO price. So what's your take on the US markets and on technology?
Well, there's a lot going on. So you made mention of US banks. They reported smashing numbers last night. 5 of the big guys reported results. Earnings up for the quarter over 40%. Phenomenal numbers underpinned by really strong equity trading revenue, but also investment banking revenue that feeds in. That partially came from the huge IPO that was SpaceX. So SpaceX shares, as you rightly point out, have rallied from 135 issue price all the way up to 225 and are now back to 136. So to me, SpaceX is a bit of a coin toss here because it's not really underpinned by earnings. If you think about the rest of the tech space, though, and I know you highlighted IBM, but more broadly, there is a lot of, these guys are making a lot of money. If you think about, and then it's not too frothy in this space either. So if you think about Microsoft's down from sort of 540 a share to 380 a share. They're now trading on 19 times earnings. Nvidia's trading on a similar multiple. Meta's trading on a similar multiple. So there's a lot of money being made in tech, and I think this second quarter earnings season will go a long way to confirm that once again. So to me, I think that you've got to be selective in tech. There's a lot of headlines around the semiconductor space and huge volatility there. There's a lot of headlines around SpaceX. But ultimately, investors have got to remember that share prices track earnings. For now, earnings are going in the right direction. We saw it last night in the banks, and we're likely to see it in terms of technology stocks when they report their quarterly numbers shortly. I think the more important thing for me, and in respect to the US market, and probably our own, linking back to our own market, is a broadening of the rally. We want a broadening of the earnings base. So we don't just want to be seeing technology companies driving the lion's share of US earnings. We want to see that broaden, and that broadening of the earnings base over in the US, that would be a positive read through for our market. So look, I'm positive on US equities at this point in time. Expectations are for about 24% EPS growth in the second quarter. That's a high bar, but for now we've seen the banks smash that on their results last night, Ricardo.
We've spoken about tech, US markets, the oil price, the conflict in the Middle East. Where does China sit in all of this? We saw Chinese GDP growing at its slowest pace in 3 years. What does it mean for investors, the markets, and for Australia?
Well, China's pretty important for Australia because of the link with commodity prices. But I think the more important thing is that for Australia is that commodity demand has broadened. So it's not just demand coming from China. So to me, I think China has been slowing. It's a known, and it's not having a huge impact in our resource companies today on the market. I think if you think about resources, which are really influential in Australia, you've got this intersection between AI demand and this broader electrification of energy grids, and that's really underpinning a structural move towards commodities. It's very commodity intensive to build renewable energy. It's very, AI development, data center development is very commodity intensive. It's not right across the commodity complex, but it's in some of the key areas of it. So to me, I think, I'm quite bullish on the commodity side here, which means you've got to be reasonably bullish on the Australian market. With a skewing portfolios more towards the commodity side. So if I look through some of the key areas of, copper, we're moving into structural deficit. I think gold prices are at levels that, investors can accumulate back into the gold space. Iron ore is held above $100 US a ton. So that's been incredibly resilient, even though China's been slowing. So I think there's enough to be positive on the commodity side, notwithstanding the slowdown in China. So I'm reasonably positive on Aussie equities here, Ricardo.
So given everything we've just discussed, how is it all playing out for the Australian share market and on the Australian dollar?
Well, the share market's been pretty muted over the last, 3 or 4 months. We've been trading in this really tight trading range with, anchored to 8,800 for the ASX 200, which has been a little bit frustrating when you see what's playing out in US markets with major indices, scorching to new all-time highs. We've obviously got a huge number of issues in Australia, from productivity to regulatory change, budget policy issues still working their way through. And ultimately, as I said before, share prices follow earnings. And one of the key earnings drivers of the Aussie market, or influential things in the Aussie market, is the banking space. And that's probably a little bit soggy at the moment in terms of the outlook for earnings growth. We're seeing house prices come back. So look, I think there's a clearer path for growth in US equities. So what we're telling, how we're positioning portfolios, talking to clients about, is overseas diversification, but also I'm hoping to see, or looking to see, the broadening of the rally both in the US and here in Australia. So we're positioned for a broadening of the equity market rally. So not just narrowly focused in technology or narrowly focused in one particular area of the market. So I think we're starting to see, and the banks for a good case in point last night over in the US, that we should be positioning for a broadening of the rally. But as I said before, reasonably optimistic in terms of equities. And I wouldn't be surprised to see the ASX 200 be trading with a 9 handle in the not too distant future.
James Gerrish there from Market Partners, and he wraps up the podcast for this Wednesday. Give it a like, review and subscribe if you enjoy it. And don't forget, you can watch On the Money during the 6:30 weekday edition of SBS World News on SBS. The podcast returns tomorrow. It drops after the market close, and I'll catch you then. This SBS On the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.